What's up, everybody? Rel here from E&J Cap, also known as Trading Finance with E&J Cap. AMD has earnings call tomorrow. I'm excited. I'm usually bullish on AMD. They've been killing it the past year. Now, for those who watch me, I hope from before, when I was telling everybody to buy AMD at $30, they did it and ended up making money. If you did, congratulations. I myself am up 115% today, which is amazing. I accumulated most of my shares at 30, then I started purchasing them at 44, and then 50, and then I started buying fractional shares around 93. We're just trying to accumulate as much as I can. Now, on these earnings call, we always suggest never to do a gamble, never gamble on earnings. I mean, we've done in the past, we made a killing. And then we also lost money as well. I remember I lost instantly, I think around $800 on Starbucks earnings. They're good. And then there's something Trump did. And when I say less than an hour, my option went under. You don't want to do that. But like I said, my thing's about to fall off. With no risk comes no reward. That's what Evan always says. So we're going to do expected price move on AMD. Now, for this, a strategy you want to run on earnings is a long straddle, meaning you're buying a call and a put at the money. Okay, now usually people do this because they're not sure what direction the market's going to go. And also another thing, you want to find, when you're doing a long straddle, you want low volatility, so when it can spike up, that's when you really want to take your profit and leave. Now, another thing with the long straddle is it's pricey. Right? It can get pricey. So, for the expected price move, what you're going to need, for all my people that's about to gamble AMD's earning call tomorrow, I might be doing the same thing. So, now, again, disclaimer, I'm not telling you do a gamble play. I'm just suggesting if you can risk it, go for it. If you don't have the money to do it, by all means, don't do it. Okay, so what you're going to need, you're going to need the stock price. You're going to need the implied volatility. You're going to need the number of days it expires on the option contract. So I have 25. And number of trading days is 252 in a year. So to find this, you got to turn this into a decimal, just add a 0. You're going to divide this. You're going to get, you're going to get this number. You're going to square root it to get this. So we have $92.85 times the volatility times the square root. Now, you come up with a number of $18.35. Now, you can expect the stock price to be around $1,100.20. On the low side, you can expect it to be $74.50. And like I said, if you're going to run a straddle, you're going to make money in both directions. Either it goes up or down. So that's for AMD, little gamble. It's not telling you to do it, just a suggestion. If you want to risk it to get the reward, by all means, go for it. Because trading, I'm going to take this down. Because remember, oh, I hate my computer. Trading should be fun. It shouldn't be just staring at the computer all the time. If you enjoy doing something, take a few risks while you're at, Like, if you don't have the money, don't do it. Sorry, I'm looking at it right now. Went up to 93. If you don't have the money to gamble on it, don't. Just stop buying shares. Wait. I mean, if you do dollar cost average like I do, put a certain amount in, buy each month. But there's strategies. Also, I mean, if you're on the bullish side, you could always just do a call option. Those are a lot easier, cheaper. You could also do, if you're bearish, just buy a put. Now, if you're kind of bullish but kind of scared, you can do a protective put, stuff like that. Also, you could do, there's so many strategies you can do to make income in your portfolio. You can do covered call writing, where you're long the position and you want to sell a call. Now, when you do this, you want to kind of put it out the money so you can keep that stock, but if it does hit that price, you're going to be assigned, so you can part way with the stock, but you also still made some profit. Now, options is really good. Options is a great source of trading because you have leverage. For example, like who has This Tesla trading at 800. Who has enough money to buy 100 shares of Tesla? Now, when it comes to options, you can control those amount of shares with little down payment. Maybe like $1,000, $2,000, you're in control of 100 shares of Tesla. But I don't want to get off the side. We're talking about little gambler plays. If you want to gamble it, by all means, do what you do. I'm bullish on AMD. You know, Lisa Sue's a dog. I just love how she runs it. And she's not even the top dog in that company either, but she's doing a great job, you know. So look, if you're gonna gamble it, I gave you the expected price to move around $18.35. On the high end, it could be $1,100, $111, and then on the low side, you're looking at $74.50. Now, like I said, you can try to run that strategy. If you do, let me know how you did. I'm predicting AMD mid-February, at least 112 myself. Like I said, I'm bullish on them, so that's just me. Also, who else is Apple's having earnings too, if you want to do that. Shout out to Apple. I think Tesla is too, Microsoft. There's a lot of good gambles to do. Like I said, if you're a gamble and a risk taker, by all means do it. Disclaimer, I'm not telling you to do it, you feel me? So, guys, that's a little short video for today. Make sure you let me know what you hit if you decide to do this strategy. Peace, guys. Have a good one.